Welcome to Decision Vision, a podcast series focusing on critical business decisions. Brought to you by Brady Ware Company. Brady Ware is a regional, full-service accounting and advisory firm that helps businesses and entrepreneurs make visions a reality.
Welcome to Decision Vision, a podcast giving you, the listener, clear vision to make great decisions. In each episode, we discuss the process of decision-making on a different topic from the business owner's or executive's perspective. We aren't necessarily telling you what to do, but we can put you in a position to make an informed decision on your own and understand when you might need help along the way. My name is Mike Blake, and I'm your host for today's program. I'm the managing partner of Brady Ware Arpeggio, a data-driven management consultancy which brings clarity to owners and managers of unique businesses facing unique strategic decisions. Our parent, Brady Ware Company, is sponsoring this podcast. Brady Ware is a public accounting firm with offices in Dayton, Ohio, Alpharetta, Georgia, Columbus, Ohio, and Richmond, Indiana. If you'd like to engage with me on social media with my chart of the day and other content, I'm on LinkedIn as myself and at Unblakeable on Facebook, Twitter, and Instagram. I also host a LinkedIn group called Unblakeable's Group That Doesn't Suck, so please join that as well if you would like to engage. Today's topic is, should I fight the IRS? And I'm actually surprised at myself that we haven't had this topic before, because I think this is topical for everybody. It's clearly an evergreen topic. I'm not sure that anybody is more feared in our government than the Internal Revenue Service. You can make an argument that outside of the armed forces are the most powerful government agency. And the fact of the matter is that hundreds of thousands, if not millions of people have interactions, or people and businesses have interactions with the Internal Revenue Service every year involving some dispute over the amount of taxes that they owe. And I think for many of us, the goal, if the IRS approaches us with any kind of controversy, is we just kind of want to make them go away. Most of us don't necessarily have an appetite to fight the IRS, but that calculus may change. You may not have the money to pay what the IRS wants you to pay, or it may be just an unreasonable demand, or it may be, in effect, if it goes in front of a court, it may wind up being an illegal demand. But how do you know that? And I think that is difficult to know. And even CPAs will give you a nuanced answer here, because fighting the IRS is hard, and fighting the IRS is scary, and fighting the IRS has an uncertain outcome. Notice I didn't say, should I beat the IRS? I said, should I fight the IRS? There's no guarantee of victory. And so I think this will be a very interesting topic, even if you haven't been the target of an IRS investigation or action or principle of an action. You may be in the future, and forewarned is of course forearmed. And so joining us today is my new colleague, actually, Bruce Wood, who is a principal at Brady Ware Arpeggio. He is a business appraiser whose practice focuses primarily on tax-specific areas, including tax controversy, which means executing business appraisals and litigation support in U.S. tax court cases, as well as settlement offers between the IRS and taxpayer under the direction of tax and estate litigation attorneys from national and local law firms. Bruce is also an expert in estate, gift, and trust tax and business transactions planning and compliance. He works with closely held businesses such as S Corps, C Corps, and LLCs, family partners, and etc. He brings over 30 years of experience to the marketplace, spending the last 20 in business appraisal after 12 years as a CPA tax advisor. Often faced with decisions or situations impacting the value of a transaction or business, Bruce helps navigate the complexities of those situations. He has helped in industries such as meat processing, professional services, manufacturing, distribution, food service, mining, technology, retail, and other business sectors. And I can't tell you how delighted we are to have him join the team. And I'm equally delighted to have him on the podcast. Bruce Wood, welcome to the Decision Vision podcast.
Thank you so much for having me, Mike. And I am equally thrilled not only about being here, but about being with our company. It's been a really good really good match.
So let's start with the basics. The IRS doesn't challenge every tax return that comes through. In your experience, why does the IRS challenge tax returns at all?
Well, anything outside of estate and gift, as far as I know, they're selected first by a computer scoring system that is set up to determine anomalies. And then managers go through those returns that are selected to see which ones are audit worthy. When it comes to estate tax returns, when somebody files one, it's going to be looked at, and more automatically. It's not random. If you have enough estate to file an estate tax return, they'll look at it, and they'll either send a closing letter, which once you got the closing letter, then they're saying they're going to leave you alone. Otherwise, if they think it's audit worthy, they'll look at it more closely, may inquire, may do an audit.
Now that's interesting. I didn't realize they sent a closing letter. So no news is not necessarily good news. You either get an affirmative notification that your estate appraisal has been accepted, or there's some sort of other action that'll be taken.
Right.
Interesting. Okay. And for purposes of this discussion, I think it's important that our audience understand, and you and I have talked about this prior to the conversation, you specialize in a specific area of tax controversy. You're not necessarily challenging or working on income tax returns. That's what more conventional CPAs do, but
That's
rather
right.
a fairly specialized area where wealth is being transferred from one party to another, whether it's a gift or an estate or charitable contribution, things of that nature.
That's right.
So, when the IRS decides they're going to raise an issue, and then they say, you owe us X number of dollars, what usually goes into that? How are those numbers of dollars calculated from the IRS perspective?
Well, they'll do what's called an adjustment, or first would be a proposed adjustment. And so, for example, they may disallow a discount. Well, give you a little background. In business appraisals for non-controlling interests, especially, there are control and marketability discounts because people wouldn't pay for as much for a block of stock that's non-controlling. And the IRS has a serious issue with that. It's very common that they'll make an adjustment to the discount. So they make a proposed adjustment. So let's say it's $10 million. So that means you owe tax in their mind on an additional $10 million plus interest and penalties for underpayment. It may be $40 million. They may make several adjustments in one return. So it can get expensive pretty quickly.
And how does the IRS decide on interest and penalties? Are those formulas? Do they get to make up what those things are? How do those work?
No, those are in either in the code or statutory. I'm not using the right word, but they're predetermined. They don't get to decide.
So they're rules based. They're not just.
That's right, rules based.
They're not just the IRS says, well, we think you're jerks, so you have to pay more dollars.
You have to pay.
There's a rule that has to be followed.
That's right.
Okay. So if you're in the unlucky group, for lack of a better term, that does not get that all clear notification, instead, they're going to challenge and propose an adjustment. What does that look like procedurally? And then how long can that process take in trying to resolve an IRS challenge?
I'm not sure there's a limit on how long it can take. There's generally a 3-year statute for them to make changes, but litigation can go on for years. I'm dealing with a 2018 case right now. So it's hard to put a cap on either the time or the professional fees that would be spent.
So years of litigation, that sounds expensive.
Very much so.
So it's safe to say that you're probably looking at the hundreds of thousands of dollars. And if the matter is large enough, like say the Michael Jackson case that recently resolved, maybe millions of dollars.
Exactly.
Go ahead.
There are situations where it's the best thing to do, but you really, but making the decision, like we're talking about, analyzing and making the decision is key. Are you going to fight this or not? What's it worth in terms of losing sleep, stress, distracting you from other things you need to do, whether it's work or play? What's that worth to you?
Yeah. So, in a way, I mean, the IRS does that cost of prosecuting or challenging does give the IRS a particular element of leverage, doesn't it? In that, if the IRS is asking you to pay another $10,000, for example, and they probably wouldn't do that, but just for an example, they're making an adjustment of $10,000 on an estate. Probably most of the time you're going to say, you know what, just write the check and move on.
I would think so.
A boss of mine once said, you cheated me fair and square.
Right. Is it worth, right? In a situation like that, typically, maybe negotiate with the agent, see what you can get, but I wouldn't go get heavy into litigation, hiring professionals for $10,000. No.
So let's talk about the negotiating with the agent, because I'd like our audience to understand, and candidly, I don't fully understand kind of how it works. So, from a day-to-day or practical perspective, when the IRS proposes an adjustment, you decide that as a taxpayer, you want to challenge that adjustment. What happens then?
Well, first thing to do is talk to the IRS agent on your case and get him to explain why, or him or her to explain why the adjustment. They'll document that usually, and then make sure they have all the facts. They may be missing facts. Well, did you know this, this, and this? So it's good to talk to them. A good IRS agent will talk to you about the adjustment before they make it. And that way, if it's based on a misunderstanding or something, you can catch it early. But if they do propose an adjustment, one thing to keep in mind is their manager has given them this case and said, go out this taxpayer. You've got to make it easy for the IRS agent to take into account what you're saying, whether it's you personally or through your professional. Knowledge is power. A professional should be advising the taxpayer on what to do, giving the agent the relevant law. Keep in mind, these agents the IRS is understaffed, according to them, and there are so many things they can't get to, so they're going to go for the low-hanging fruit. Don't give them low-hanging fruit to the extent possible.
And then, there's an agent involved, right? And I think it's important for our audience to know this. It's not like you disagree with the IRS and bang, you're in tax court. There's likely going to be a lot of things that need to happen before appearing in tax court is even a realistic possibility. And
right.
That's before we even entertain the discussion as to whether or not that's even a desirable outcome. Right. So
right.
Where does that conversation with the agent go? If you're not able to get a resolution with the agent, what happens then? Is there an escalation to a manager or something, or how does that work?
Yes, you can request to talk to the agent's manager next. And if you exhaust that kind of option, there's IRS appeals, and it takes at least several months to get on their calendar. But this is just what I've heard several places. But appeals will give away about half of the cases, or half of the issues, I should say, because if the IRS agent hasn't documented it properly, the agent thinks the appeals agent thinks the IRS agent is wrong. They don't have the bandwidth to redo it for them. They'll just typically, I think, decide right there, okay, we're going to throw this issue out. We're going to fine for the IRS for this issue. And then then lawyers talk back and forth, and and then of course getting it heard in tax court takes God only knows how long. So you would be basically held hostage if that was a big issue to you, waiting to go to tax court. They may or may not hear your case. It may take years. There's a lot involved.
So, and it's important to understand, I think, in that process, the meter's still running to an extent, right? You're still accruing interest and potentially additional penalties while that process is playing out, right?
It depends. There are cases where I don't know them right offhand, but this will be an attorney question, but there are cases where you have to pay the tax up front and then seek a refund.
Interesting.
Depending on which court you're going to. And so that would stop the interest and penalties from accruing.
Right. But of course, the downside is the IRS already has your money. Right.
And you may or may not get it back.
Right. I mean, this may or may not apply, but they say the possession is 9/10 of the law, right? It's I don't know if this is true with IRS matters, but it certainly feels like I have less leverage if I've already written the check.
It does. That never
I don't know
helps.
if that's actually true, but it certainly feels uncomfortable. So,
sure.
So in this conversation, and let's go back to the agent level. How does having a CPA and a business appraiser like you and specialized tax legal counsel, how does having a team like that impact the likelihood of getting the matter resolved in a way that's positive for the taxpayer?
Well, these professionals know the law and can, when the agent proposes an adjustment, they can assess the validity of the adjustment, check out the law, and provide the agent more information. There may be something the agent missed, and they can communicate if they disagree with the agent on the issue. And they're not emotionally wrapped up in the case like the taxpayer is. That's another key element. It's a lot of times it's best for the taxpayer not to talk unless he's directed to, and let the professionals do the talking.
And that brings up, I think, a very important point in that, not speaking at all to the dedication or professionalism of the IRS agent or individuals involved, but the fact of the matter is it's not their money they're playing with on any level, right? And so
that's right.
I do think that there's an inherent negotiating advantage with the IRS that is in favor of the IRS, because at the end of the day, the entire exercise is depersonalized, right? It's not like an IRS agent gets a bonus if they collect more tax.
They're not on commission. You're right.
They're not on commission. Exactly. And so, just like in my practice in transactions, we do have clients say, we're too close to this. We don't want to negotiate our own sale. And we'll sort of be that buffer. It sounds like there actually is a parallel with an IRS negotiation.
There is. And another value of having the professionals there is, this is not unique to IRS agents. Lawyers do this. And gaining somebody's trust, getting them to talk. The IRS agent may go, wow, this is a really cool business. How did you do this and how did you do that? Get the guy talking. Some people love to hear themselves talk, love to talk about themselves, and they can get all kinds of information that way. And they don't even realize, what's happened until it's too late.
Well, and that's negotiating 101 too, right? It's if
Right.
you can build some sort of relationship with the other party, some way of connecting and make the relationship somewhat less adversarial,
Right.
it's more likely you're going to achieve some kind of resolution.
Right. I agree that people skills are important, and good professionals know how to do that, because IRS agents are people too. They go home. They don't want to be screamed at or told they're idiots, any more than anybody else does. And they have families. They go home. Their families are, they after a rough day, they get upset, that kind of thing. So they want respect, just like the rest of us. That doesn't mean you have to. That doesn't mean you have to agree with them. But
so, and you touch on a point that I want to actually ask as the next question, which is, I think some people are tempted to stereotype IRS agents, or really any government employee, as somebody that may or may not necessarily be competent because they're working for the government, right? We hear about, I'm from the government, I'm here to help, et cetera, et cetera. Is that true, or do you find that a lot of IRS agents, in fact, are very competent professionals?
Sometimes what you're saying is true, but other times, I've known some that left big four CPA firms to go to work there because they wanted the work-life balance. And my guess would be that they love to be underestimated. They probably have fun with that.
Interesting.
And the agent may act like they're from the sticks. They don't know anything. But that's always dangerous. Underestimating people is dangerous, including IRS agents.
Yeah, I think that's right. Years ago, I used to be a fairly serious chess player, decades ago now. But one of the hardest things to do was to play somebody who is new to the tournament scene, because you had to make sure to not underestimate them. And because they were new, you couldn't exactly predict what they were going to do.
Hustlers, perhaps.
Yeah, kind of hustlers, or just, they weren't indoctrinated with conventional thinking necessarily. So you weren't exactly sure kind of what the move sequence was going to be, even if you kind of thought that you had that all figured out. And I can see that. I can see people sort of liking the position of being underestimated and being the underdog, because if from the other side of the table, if your counterparty is overconfident, right, maybe they're going to make a mistake, right, and maybe they're going to say something dumb or damaging, or compromising, that if I'm the agent, that's going to make my life a little easier.
Right.
And also, exactly right. I'm curious. I don't have that much experience with the government, but I've read enough about, in particular, SEC actions. And one thing that strikes me about the SEC anyway is that, for the most part, they're going to give you a lot of ways out. They're going to give you a lot of off ramps. But if you're a jerk, and if you're condescending, and if you're sort of deliberately confrontational, and not listening to any kind of reason, the SEC will then turn around and make an example of you. There's a point at which the door to a resolution, sort of a peaceful solution, sort of closes, and now you're going, not only you're going to court, but you're probably going to jail if you lose. in your experience, is that the way with the IRS too? That you can sort of yell, you can sort of get in the ref's face for a little bit, but at a certain point, there's a technical foul and you're thrown out of the game.
Right, and it's a little different. You probably won't go to jail, but it can make your financial life hell. So it's not a good idea.
So, we talked about the agent level, the manager level, and then the appeals level, and then presumably after that, there's tax court level. In your mind, where is the optimal stage to settle a tax controversy?
Well, the IRS is under pressure, some kind of pressure to settle things at the lowest possible level. So, and to the extent you can, that's good advice to follow. Because every time you decide to go to the next step, it's more time, more stress, or more meetings with your professionals, more strategizing, more work produced, and less attention to other things in your life. So if you can get something reasonable, come to something reasonable agreement with the actual agent, that's certainly the easiest. Appeals, you have a 50-50 shot. So if you think, in certain cases where it's a lot of money, the IRS agent is being unreasonable, you don't think they did their homework or really have a leg to stand on, that might be a good option.
So in your experience, how often do challenges on, and I'm just going to limit this to your world because I know that that's the place how often do challenges happen on gift and estate tax returns? What would you estimate as a percentage of, given say 100 or 1,000 gift or estate tax returns that are filed, what number of those are likely to face a challenge?
Would probably, I don't know a number, but it would probably, I can tell you where I think the starting point would be, though. The larger estates would likely be looked at more closely, and they're looking for low-hanging fruit. I've heard IRS appraisers talk. They came to the GSCPA one time and gave us a presentation. They don't have time to look at every report. They're overwhelmed. We have fundamental disagreements about whether control and marketability discounts even apply at all, much less the amount. But they're going to go after the low-hanging fruit. The reports that aren't documented, that take leaps of faith, that say base a marketability discount on an average of a bunch of studies instead of what's going on with that company. When there's anytime in their analysis where they have an analysis, then they have a conclusion, and they don't tell you how they got from one to the other. When they leave holes like that, my goal is in my reports is always to make it easy for the user to go through and duplicate my work. They could take the same information I had, access to the same databases that I have referenced in the report. So even if the IRS doesn't agree with it, they can duplicate my report and see how I got my answers. When they can do that, when there's not a leap of faith somewhere, well, there's no control here, so we think it should be 20%, something like that. So document. Make their job easier by making the report easier to read, and give them less gray area to jump on.
And I'm a big fan of that approach. Is one of the reasons I think you and I work so well together, and that we're of the same cloth there.
Yes.
We don't like those holes. And in fact, one thing I regret about our profession, I'm sure know this, but not everybody does. We used to have another credentialing body, the Institute of Business Appraisers.
Sure.
And one thing that stood out in their series of professional standards that I think was unique and has not been adopted since, but under IBA professional standards, that a business appraisal report should be replicable by a competent professional given the same information set, basically. And
Sure.
again, doesn't mean that they agree with it, but it should be able to be replicated. And to be candid, I truly wish the Appraisal Foundation and the National Association of Certified Valuation Analysts, I truly wish they would both, and the AICPA, the third one, would adopt that into their set of professional standards, because it really should not be exceptional that we do that, but unfortunately it is. But it's really high class, I think, to put a report that an IRS agent or one of their valuation analysts, are called engineers still to this day,
Right.
sure. That they can actually reverse engineer the report. And I think that's really important.
It is. Otherwise, and in our reports, there's no ball to hide. So why wouldn't we be transparent about how we did it?
Yeah, well, and you and I could go down a different rabbit hole. Maybe we will, but not in this particular podcast. But yes, it does sometimes. I see some reports that sometimes make me think that the appraisers are intentionally trying to ensure that their report is just unreadable, taking their chances in the chaos.
So people fall asleep.
Yeah, so
I've seen that.
But we actually touched on the next question already, so I want to just go ahead and slide into it, which is, when the IRS looks at a return, and the return basically is going to be based on a report like you would do. What are the most common flags in your experience that the IRS looks for?
Well, they want, if the report's not logical, if you contradict yourself, make contradictory statements. For example, the company only pays distributions to cover tax liabilities, and then you see something contrary to that. If the report looks like it was, if sections of the report kind of look like they were copied and pasted from different sources, if it doesn't flow, if it's not logical, if there are holes in the analysis, there's no segue from the analysis to the conclusion, or there's no analysis at all. The conclusions need to be based on something to show that the appraiser did his or her due diligence and followed through and came up with a reasonable conclusion.
So, to me, the IRS seems like a different animal. Of course, we have lots of regulatory bodies: the Securities Exchange Commission, Environmental Protection Agency, OSHA, Department of Justice, you name it, we've got it. But the IRS seems like a different animal to me, in particular, in that I think more than any other agency, there is a sort of a presumption of guilt. You have to kind of prove to the IRS why you've paid the appropriate amount, not to the IRS that what they're suggesting you pay is inappropriate. Is that a fair observation, or do you disagree with that?
Well, yes and no. The IRS has to prove income, and you have to prove your expenses. So if they think your income was right, if they think your income was more than you reported, they're obligated to prove that. And any expenses, you're obligated to show documentation of those.
But in your world, where an appraisal for the estate or for the giftor has been filed, to me, it seems again like the burden of proof is actually on the estate of the giftor, not the IRS.
Right. And that's why documentation, explanation is so key. And at the end of the day, they still have certain mandates for one thing is tax affecting earnings and evaluation, which means accruing in a pass-through entity, accruing taxes that will be paid at the shareholder level, because it's the earnings that are capitalized or discounted. It should be what you keep, not what you make. And they disallow tax affecting. There are several cases that came up in Michael Jackson, as you mentioned. And the IRS has a national mandate to disallow tax affecting, regardless of all these court cases now that most of them say the tax court is not against tax affecting. But you've got to do a good job of it. You've got to do a reasonable analysis, because they're not there to recreate it. They're going to throw it out if your analysis was not reasonable, or you made assumptions that weren't true. And like, for example, an assumption that the buyer would be a C corporation. Hanging your hat on things like that we'll get it disallowed. But the IRS's starting gate position, that's a huge issue for them, is that no tax affecting is allowed. And so they probably have other mandates too. But and one of the IRS appraisers told me that to the IRS, all discount valuations, family partnerships, LLCs, etc., all of them are abusive tax avoidance transactions. That's their starting gate position. So they prefer to start at zero in discounts, generally speaking, and let you prove every percent.
So that's a very adversarial position to take. And just for our audience, when we say tax affecting, we mean that when you're in particular appraising a business, that you're determining the value of the company on an after-tax basis in terms of profits rather than pre-tax basis. And there are technical reasons why that's important. And when you get into things like pass-through entities, it can become very complex.
Sure.
But it's interesting that I'm sort of vaguely aware of this. Again, you do a lot more of this than I do, but I am vaguely aware of the fact the IRS, at least they've been trying to take this position of starting with zero discounts. They've been trying to take the position of assuming that no tax is paid by the company, that everything's a pass-through entity. How much have you actually seen that in practice? Because I have to say, knock on wood, I haven't seen it a lot in my practice. But again, you do more of this and you do it deeper than I do. So I'm curious how much the reputation is matching the practice on the road in your experience.
I just had a meeting this week where the agent actually said that. He said that it was a national mandate. They were not to allow tax affecting. And and after he said that, I thought back to some other conversations in the past with IRS agents. It seems like sometimes they're reluctant to say that if they've been told they just can't do it. And sometimes that comes out as, no, I'm going to disallow that, and they won't really explain. So this is a theory that maybe that's why. But they're uncomfortable saying they've been told not to.
Yeah, and it'd be interesting if those actually get to tax court. I think the IRS is in trouble, because when you take that position, you're actually violating professional standards. You're basically predetermining to a large extent. In some cases, you're actually predetermining the appraisal outcome.
That's a good point.
And that may be why maybe there's a national mandate, but they're probably going to play soft with that, because tax judges, generally speaking, know what they're doing. I've actually been very impressed with with their reasoning and how they articulate how they got to where they got, and they seem to understand complex financial discussions with actually a fair amount of fluency.
They do.
Tax judges are going to pick up on that pretty quickly.
Oh, sure. They don't buy the smoke and mirrors, that's for sure.
No,
they've seen enough of it.
And they understand. I mean, they get the professional standards. They're of course, in every place there are good judges and bad judges. In every profession there are good appraisers and bad appraisers. But there are enough good judges that they take the time to understand professional standards, and interesting to see how that goes. But anyway, I could talk about that stuff all day.
Right, and they do. The tax court has disallowed tax affecting, but they make a point of saying that it's not because they think tax affecting is wrong. It's because it wasn't done correctly. And right. And they think it's not their job to recompute it for you.
Yes, that's right. And I've seen the same thing. That there've been they'll do what you're supposed to do, which is rule or make a value judgment based on the prevailing facts and circumstances, not a blanket ideological statement, which is what you're describing.
Right.
A question I want to make sure we get to here is there's been a fair amount of press and you've indicated yourself that the IRS is understaffed, or at least they say they are. I think they're in the midst of a big hiring push right now. Good luck. But does that, when the IRS is understaffed, how does that impact their reaction to tax controversies? Does that mean that a taxpayer might be able to get away with more, or there's simply going to be a longer queue towards resolution, or are there other ways in which understaffing by the IRS kind of impacts the tax controversy conversation?
Well, I think they certainly do have to pick and choose. The IRS certainly has to pick their battles because of it. Another theory I have is that taxpayers hear that news that the IRS is understaffed, and that sometimes they get emboldened. Certain taxpayers will get emboldened to push the envelope.
Yep.
And they might end up being the ones who stick out and get audited. I don't have data to quantify that. It's just a theory. But.
Yeah, and I suspect that's the case, right? And a key distinction here that you've pointed out, and I just want to come back to because I think it is critical, is that with income tax returns, there's at least a semi-random element as to whether or not your return will be flagged for some sort of closer examination. But in terms of gift or estate, if you're a taxable estate, i.e., roughly 11 to 12 million bucks, I think is the number range for a married couple. If you're much more than that, it's really a case by case basis where if somebody actually is taking the time to carefully read your documentation, and then if your documentation is dubious, then you're probably going to get that call you don't want. And if your documentation is solid, then they're going to move on to that low-hanging fruit, as you said.
Exactly.
Let me ask this: in your experience, when the other side of that coin is one, picking sort of the lucky few of the returns that will ultimately be audited or more closely examined. But then the other part is, once you're in that phase, what is the motivation to negotiate, right? We've talked about the motivation on the part of the taxpayer: cost, time, distraction, loss, sleep, etc. In your experience, has a short-staffed IRS made the IRS more motivated to dispense with matters?
I would think they would be, since they are overwhelmed. The agent will be getting more cases from their manager. The manager, again, I'm theorizing, the manager says, have you finished the Smith case yet? No, I haven't. This taxpayer is still fighting with me. No, and I would think that the manager would be under pressure from even above them to say, settle it, give them more, see if you can work it out. So I think it the IRS is so overwhelmed that I would think that, and they do have some pressure from the top, at least, to settle at the lowest level possible. Because at some point, if they litigate too much and ask for too much more money from Congress, the taxpayers are going to start to get irritated. I think that's how it would play out.
Okay. Now, when we think about the IRS, or most of us anyway, you're different because you're so close to it, but when most of us think of the IRS, we think of it as a pretty powerful agency. And that means that there can be concerns as to whether or not there could be an abuse of that power. And what I'm getting at is there recourse? Does a taxpayer have any recourse if they feel like that for whatever reason the person they're talking to at the IRS is biased or is being unreasonable, is not negotiating effect, not bargaining in good faith? Do taxpayers have recourse, or are they kind of just stuck? They get who they get.
The taxpayer advocate is another arm of the Treasury, and I think that's more on the individual side. Honestly, I've never seen them get involved in what I do or with a business. And there's three arms of the Treasury. There's the IRS, the Taxpayer Advocate's Office, and there's TIGTA, the Treasury Inspector General for Tax Administration. And what TIGTA does is they protect the others from each other. So nothing strikes fear in the heart of an IRS agent like TIGTA. They fear the IRS agents fear them kind of like other people fear IRS agents, because if there is some kind of abuse, if an IRS agent engages in unauthorized access to taxpayer information when they weren't assigned, or unauthorized disclosure, those are examples where they can get into a TIGTA investigation pretty quickly if they're not careful. And on the other hand, if a taxpayer harasses an IRS agent, like shows on their weapons collection or something like that, they TIGTA will show up very quickly to defend the IRS agent. So there's kind of a watchdog.
Okay. I'm talking with Bruce Wood, and the topic is, should I fight the IRS? We're running out of time, but there are a couple more questions I do want to make sure I get in. And one of them is, can you countersue the IRS? You know, in conventional civil litigation, you can countersue for damages, or at least you can seek compensation for the cost of litigating a lawsuit that might have been improper, frivolous, or whatever. Does any kind of mechanism like that exist with respect to a controversy with the IRS?
Yes, I've heard the tax attorneys I work with, that they call those administrative expenses. They can add those on as additional damages, and they can be professional fees and any other direct costs of the litigation or the dealing with the IRS.
Okay. So, Bruce, as we sort of wrap up here, there may be questions that some of our listeners would wish that I would have asked, or maybe might have spent more time on. If somebody wants to contact you about a potential IRS controversy, just wants some advice, can they do so? And if so, what's the best way to contact you?
Absolutely, they can. My cell phone is 770-310-5347. And my email address is bwood@bradyware.com.
And that's going to wrap it up for today's program. I'd like to thank Bruce Wood so much for sharing his expertise with us. We'll be exploring a new topic each week, so please tune in so that when you're faced with your next business decision, you have clear vision when making it. If you enjoy this podcast, please consider leaving a review with your favorite podcast aggregator. It helps people find us so that we can help them. If you would like to engage with me on social media with my chart of the day and other content, I'm on LinkedIn as myself and at Unblakeable on Facebook, Twitter, Clubhouse, and Instagram. Also, check out my LinkedIn group called Unblakeable's Group That Doesn't Suck. Once again, this is Mike Blake. Our sponsor is Brady Ware and Company, and this has been the Decision Vision Podcast.